Welcome to Taking Stock. I'm Amanda Lang. Coming up, a sluggish Canadian economy in the forecast, and business and labor are united in their fear of Donald Trump. Plus, interest rates are lower, but maybe on hold for now. So what's the outlook for consumers? That's all ahead. But first, a look at where we are and what might be in store by the numbers. Big picture, the economy is sluggish in Canada with overall growth of just 1% in the fall quarter and not much better in the final month of the year. And of course, accounting for population growth, the economy contracted as it's done for the past 6 quarters. Some households are doing okay. The average household savings rate is now 7% in Canada, double the pre-pandemic levels. And people who already own their home are also enjoying continued high values. 66.5% of Canadians own a home, and about half of those are mortgage-free. The other half are facing higher rates when their mortgages reset in 2025, 2026. An estimated 4 million mortgages will do so. And even with rates coming down, they will be well above where they were 5 years ago. Rates have come down, of course, from their high watermark of 5% to 3.25% and expected to keep declining. Some economists think rates could go as low as 2.5% next year. One big factor in that, unemployment. It ticked up at the end of the year to 6.8%, while wage growth slowed slightly to 4.1%. The economy is expected to grow in 2025. The IMF is calling for 2.4% expansion. That's assuming Canada isn't hit with an unexpected blow like trade tariffs. Other than tariffs, the U.S. is actually a bright spot for Canada. Its solid growth of 2.8% in third quarter is good news for its largest trading partner in 2025. Weakness in the Canadian economy was definitely a factor in 2024. Will it continue to be one in 2025? Ben Tal is Deputy Chief Economist at CIBC. Ben, thanks for being with us.
A pleasure. Thank you.
So let's just start with your feeling about where the economy goes next year. We've seen softness. Does it persist?
Well, I don't know. You tell me what Trump will do, and then I'll tell you what will happen with the Canadian economy, because quite frankly, this is the wild card, what Trump is going to do. If Trump is going to behave, and we'll discuss Trump in a second if we can, I think that the first half of the year will still be soft, but I think that the magic of low interest rates will help. We will see investment rising, the consumer will recover, the labor market will be okay, and even the housing market will start showing recovery. So I think it will be a tale of two halves. The first half will be still soft. The second half will be an acceleration in activity.
And then, of course, there's that wild card that we're talking about, the uncertainty of trying to model out something that could be, not just could it happen, could it not happen, Ben, but it's a whole range of things could happen. What do you do from an economic point of view? First of all, how do we sort of try to forecast something that we really don't know might happen?
As an economist, I'm very confused, quite frankly. I think that the key point here is that we have to realize one thing. Uncertainty is the ultimate goal. Uncertainty is the ultimate goal as far as Trump is concerned, and chaos is the policy. Basically, if you are a CEO and the situation is uncertain in the US, you're basically going to the US as opposed to anywhere else. And that's exactly what Trump would like to see. And that's why he's going to tweet a lot. He's going to confuse everybody. But at the end of the day, like in the previous 4 years under Trump, he's going to be doing more barking than biting, because the tariffs are going to be very, very painful for the American citizen, and he knows that. So he's going to use tariff as a negotiating tool. It doesn't mean that he's not going to do what he's saying, but it will not be as severe as perceived. That's our working assumption. And in this kind of a situation, we have to remind ourselves that even under Trump, back then, 8 years ago, the Canadian economy expanded by 2.5% because the US economy was doing okay. So it depends where you are in this game.
And of course, that is worth keeping in mind that if we don't get some worst case scenario of a direct trade war, even an indirect trade war, we do have a strong U.S. partner. If they don't mess up their economy through some of those very policies, we should benefit, should we not?
To an extent, yes, absolutely. But if you are a dairy farmer, if you are in the forestry industry, you are really worrying about what Trump is going to do. Aluminum, steel, we went through it in the past. Mm-hmm. So by sectors, you really can be nervous. But for the economy as a whole, it might be recessionary if he's going to implement 25% tariff. But if he's going to do something relatively modest, I think it might be positive for some elements of the Canadian economy. At the end of the day, we have to realize that it's going to be very painful for the Americans as well. He's going to negotiate and he's going to try to come up with a deal, as he says. Another factor is that the fiscal story is not going to be as bad as perceived because a lot of it is already in the market. And even the immigration story, he's not going to deport 11 million people. He's not going to deport 1 million people a year. A lot of noise, not too much biting.
All right. And then on this side of the border, when it does come to immigration, we've seen some pain around housing and affordability related to that. Now we might see economic weakness as we pull back on our immigration plans.
I'm not so sure about it. I think that while the government is telling you that population growth will be negative 0.2, if you do the math and if you assume all kinds of reasonable assumptions, population growth will be 1.5% next year, which is going to be very reasonable. Remember, we were at 3.5% while the OECD average is 0.9. 3.5% was way too strong, too much of a good thing. 1.5 is reasonable, sustainable, and I think that's where we're going. So I'm not too worried about that.
And so in terms of kind of whether you think people should feel generally optimistic about next year, with the big asterisks, are you feeling mildly optimistic about the Canadian economy right now?
To an extent, yes. I think that the housing market will start recovering. I think that the magic of low interest rates will start impacting positively the economy. I think that if Trump is not as bad, the long end of the curve, namely 10-year rates, will start going down. So all those forces will stimulate some economic activity. It's not going to be a great year by any stretch of the imagination. It might be even below potential, but the second half of the year, let's hope and pray, will be better than the first half.
Ben, so good to have you. Appreciate your time.
A pleasure. Thank you.
Ben Tal, Deputy Chief Economist at CIBC. Coming up, as business looks ahead to 2025, there are probably more unknowns than sure things. We'll find out how they plan to manage that uncertainty next.